Okay, hi there all. G'day Pete. Just let me know if you can hear me. I'm guessing I'm coming through loud and clear. How bad a run on these microphones of late. I've got to blame it on the microphone. It's not really that's fault. It's mine. I hope we're all doing well. I hope you like my little picture on there. Back from holidays. How was it? Self-isolation for 2 weeks. You're better off doing that on the boat, mate. I've got the kids home at the moment. Fantastic. Yeah, got the kids home at the moment. So they went into, g'day John. They went into holiday mode. Then it was basically one day at school was yesterday, but they didn't go. I just thought, why bother? Keep them home, be on the safe side. So we actually went out and got a little kitten. So they're wrapped. That's going to keep them busy for the next few weeks. When we're all home, basically playing cards and bits and pieces. So I'll be watching the markets and trading. So it's going to be, it keeps them out of my hair for a little bit, but we'll see. So hope we're doing well. Hope we're all, look, well, honestly, I just hope you're doing well. I hope we're not getting in trouble too much. But with these sorts of things, there's always opportunity, lots of opportunity. I've been spending my days basically intraday trading. So you would have seen a few alerts come out. There was one on gold, which pretty much nailed that yesterday, which was great. The entry, and I tighten up the risk. So I hope everyone's locked away something because it's just gone. It's gone harder than what I thought, to be honest. And I'm only looking up to sort of that 1560, 50 zone, and now it's around 1580 or thereabouts. So it's gone a bit harder than what I expected before a pullback. So I'm expecting a bit of a pullback and then, to a pop maybe tonight. Or we could just head south, so who knows. But that was a cracking entry last night. Went really no pressure at all. We had the Hang Seng that, as long as you can sort of stomach those wider stops and you can adjust your risk. I mean, if say, especially with indices, because so if you're doing CFDs on indices, you can adjust your risk quite easily. I mean, if you're used to taking, say, I would trade 2 SPY contracts, $25 a point each. To adjust that, I can only cut it back by 1, and you only got $25 a point. But you can't, with the volatility at the moment, for example, I might have been taking 6 to 8 point stop on the SPY 200, usually looking for, on a good day up to 10 points, maybe 15. If I did well, now I've got a 25 to 30 point stop with, you can quite easily get 50 points. I haven't on the SPY just yet. I think the most, recently it's taken 40 or so here and there, but Hang Seng's like a rocket as well. I'm using a 70 point stop on the Hang Seng, and that can get done in seconds if you're on the wrong side. But as long as you know that, you can adjust your risk, and you can't really adjust it on the futures as such. I mean, bigger accounts, yeah, you can just cut back on contracts, but if you're used to sort of doing, like I said, this $50 a point, 2 contracts on the SPY, and you want to cut it back to less than 25, you can't. Or if you're happy to do 25, you can only do 1 contract, and you can't take your partial exits. You can't do this, or you can't build up a position as such if that's the maximum risk you want to take. So yeah, it's great on the CFDs to be able to do that and split it up. You can do $20 a point, and then take 10 off and take another 10 off, or you can buy 2. You can start with a $10 a point position on the SPY, and if it starts to get in your way and you've got another little high low, bang, you're in again for the next 10. You can sort of build that position a lot easier and be a lot more comfortable with your risk, and still have a nice wide risk level. So that's what I've basically been spending most of my days. I don't believe, when you can look at shares, I don't think this is over just yet. And every green day, I know there's people diving in, like gold stocks, for example, diving in this morning. I was a lot happier if I thought gold was going up to buy the physical spot gold, because you're getting the run up. So basically, we made $70 last night. Most people buying gold stocks this morning because of the $70 rally could get spat out tonight or tomorrow morning if they gap down on the open. If gold drops $50 tonight, which it could easily do. Not saying it will, but say it does, we get stopped out, book a profit. If you bought the shares, there's a good chance you can get cleaned up, because you're going to get a gap up on the open. And if you get the gap up in the open, it's saying they're up 10% on, say, SAR or whatever, Saracen. You're up 0, and it drops 10% tomorrow, and gaps down on the open, and you're down 10%. Yet the stock is from break even. It just makes, for me, it makes it too hard with these sorts of swings to be trading without a 24-hour market, if that makes sense. So stocks, ASX is only what, 10 to 4. So it just doesn't make any sense to me at this stage, especially with the volatility and to jump around trying to pick the bottom of a stock. Like I said many times, if you're trying to pick the bottom, just 1 second, guys. Just 1 second. All right, sorry about that. Sorry, John. It's no sound because I was just yelling at the kids. um, yeah, I can't remember where I was now. I'll minimise that anyway. Yeah, I was just talking about risk and your CFDs, all that sort of stuff, and trading shares. I do think, this is, we'll get onto the XJO, ASX 200 is what I'm trying to say. If you were trying to buy, we mentioned this before, if you were looking at this, big sell-off, that was great, and you're trying to pick the bottom onto some stocks, you got carded once, maybe stopped out, you tried again. So anyone that tells me they picked the bottom, and they're just buying it, and if I look at this chart and they say they picked the bottom, it happens to start going up, I'm a firm believer they've done it a few times and been carted out in a stretcher. Um, I don't think that's the way to trade the market. You've got to be shown by the overall market, because the market's your net effect. It's not, one stock goes up, that's great. If it does go up and the other market's going down, you got lucky picking that one. But your overall market, the ASX 200, the sentiment is definitely down at the stage. It's just heading south. I mean, green candle doesn't mean a difference. Tomorrow it could turn down and be straight down to 4,300 quite easily if something kicks off tonight again. So yeah, that sentiment, I'm using the ASX 200 as more of a sentiment gauge. Once we start seeing buyers are happy to step in, because sooner or later, if you're not out, you're probably not going to ever get out. I mean, it's kind of pointless if you didn't get out at the start of that sell-off of your portfolio and you're still in. If you've got some stocks that are not under pressure too much and you believe them, that's great. I mean, not saying it's a bad thing, but if you haven't got out earlier, you're probably not going to get out, which is saying that there's a lot of fuel that was going to get out has done it, which means how much more fuel is to continue to push this market down? It might be those opportunities that are selling overnight, or it spikes down, they're lifting it on the open, and only intraday trading it. But I don't think there's many people that are left potentially to sell, which means that there's going to have to be some signs of buyers starting to step into the action and starting to lift it, starting to look to support the ASX. But it hasn't happened yet. So if you're trying to buy, basically buying a falling knife, I just think you're going to have so much room to move on the upside when this thing starts moving, that it's going to be a lot easier. You're not under stress. So I think keep your powder dry for now. That's what I'm aiming at doing anyway. And then just waiting for more confirmation that buyers are starting to step in. And I still think that that's going to come with, it's got nothing to do with stimulus. Everyone's getting upset because the stimulus is not doing anything. It is, but that's not the thing that's going to stop the market. Stopping the spread of coronavirus is what's going to stop this downward pressure on the market, because every day it's still expanding. And as long as it still expands, we cannot assess the economic damage on the global environment or the global markets. We can't assess it because we assess it today off past figures, and then tomorrow we have to go assess it again because it's spreading more and more and more every day. So until that gets stopped or slows down, or there's a vaccine of some sort to cap that, and we start, less and less cases, or it starts to run its course, or we've seen the peak, we assume that we've seen the peak, that's when I think you'll start to get that buying action into the markets, and that's when stimulus is kicking in now. I think that it's easy in the bond market, but from a share perspective, I don't think it's going to happen just yet. I mean, say that coronavirus explodes, stimulus has done all that thing, coronavirus explodes tonight in the US and it's just going nuts. We will get a sell-off. Stimulus or not, we will get another sell-off, because that is what's driving the market, the fear. because they don't know. There's more job losses all the time. So the more that spreads, the more job losses, the harder it is on the economy. So that's my view anyway. That's what I'll be looking for. So it's really a news-based thing at the moment. And just to see some signs, in conjunction with what the change in news or spitting up or what's showing us, to see when buyers are happy to start stepping in, nibbling, or start, whether you're averaging down, I don't know. Does that make sense? So that's what I'm looking for at the moment, and that's why I've steered clear. I haven't really looked at any of these stocks much. I flick through them every now and then. I mean, why jump into MVP? Actually, I don't mind that because that's a good stock, and that's I didn't participate in this rally, and I had it for a long time. I made a small profit before it took off and hit over $11. I might have got out at 6 somewhere from 525, but I had 525 for about a year and a half. So that was annoying. And I had another little nibble at MVP, but because of that sell-off, that to me is starting to show, I guess I'm sounding a fundamentalist now, but a bit of a bargain. But I don't want to get in yet because it become more of a bargain. I'd rather buy it on the rise. And like I've always said, if you got a high low here, if you pick that, great. That's guessing. If you pick this, it's a trade. You're trading the market. You're not guessing the market. And if you can trade the market, the times when you get that and you're wrong, you're cutting out. So your statistics are a lot better. Your heart, your heart will beat a lot easier, and your mindset's just going to be a lot clearer, and you'll be a lot more positive when you're seeing less and less red numbers in your portfolio. If you minimize that, you'll start to get, I think, this is what's been happening in my trading over the years. You get more positive. If I'm getting constant losses, I start doing dumb things. And if I start doing dumb things, obviously that just gets worse. And I just don't believe that I'm a good trader. It's as simple as that. But once I start sticking to my guns and go, well, if I miss out, I don't care. But if I've got some confirmation, I'm happy to give up a bit on that. Happy to give up a bit on the trade to be a higher probability setup and a higher probability trade, meaning that all of a sudden my statistics might go from 45% right to 55, 60% right. And that is a big difference, I think, on your mental game as well. That 15 or 20% strike rate increase, even if it's straight out one-to-one, it's gone from being constantly losing money to consistently making money off a one-to-one. And then all of a sudden the confidence is boosted, so you let it run a bit more. And that out of that, instead of getting one-to-one, you're starting to get 1.5-to-1, 2-to-1. And I think that is the key. And a lot of it can come down to, discipline when you're getting in or out of the market. And I think that's what it's going to take going forward. Probably another sermon, but I think that's what it's going to take to really start to get into the bottom and take advantage of what inevitably will be a bounce. All right, let's we'll quickly go over the gold. Oh, sorry, before what I want to chat about quickly, if anyone's trading CFDs, no, most of us are probably straight out stock traders, but if you trade the CFDs, what we've seen a lot of, you all know we've got the Trade Direct platform. Now, this is Trade Direct. It's been constantly, this is the SPY 200. It's been constantly, consistently, without moving 1 point on the spread, on the SPY. And it's the same on the ASX 200. On our other indices, they're locked in. They're not moving. And it's been a great effort by these guys, I think, to do that. Just, with the volatility, they're sticking to their guns, and the spreads are locked. Now, the margins, I think, are pretty much the same as well. Now, I know others, and I'll name them. IG, for instance, keep widening their spreads. I could go to trade it in the morning, notice the spread on the SPY was 3 yesterday or 4, and it's gone out to 6 on the open because it's a bit of volatility. I've seen an 8 when Trade Direct has been 1. So spreads are just blowing out, and then say that's for the first 10 or 15 minutes, and once the open's done, it goes back to 5 or 4 or maybe 3. So these things are happening a lot, and Saxo's the same. They keep blowing out their spreads. Now, if you're trading and you can't trade out obviously your longer term, you're swing trading like on your shares, you want to intraday trade, and all of a sudden you're getting smacked on the spread. They could argue there's more volatility, so it's moving more. So that's fine. That's not your money. That should be my money because I'm taking the risk of getting a bigger stop out. But instead, you've got to worry about an extra, say there's 1 point, you've got 2 point on the spread getting in and out. So if I'm going to buy it, I'll hit the offer at 7 and I'll be selling at the bid. So I'm only worried about 2 points. Whereas if I'm doing it on IG, for instance, I've got at least worry about 8 all up. So that's another 6 points. Probably at the minimum, it's been worse. So I'll have to worry about 16 points as opposed to 2. Now that's ridiculous when you're thinking that You know, if you're trading $25 a point, I can't even figure what that is. $300. It's not in my pocket. It's in someone else's. So just be wary of the spreads and what's happening. And a lot of these bigger players have been shown up to, you know, they're widening them at times when you don't want it or you don't need it. And all that means, if you didn't notice, I nearly hit the button a while ago on the Hang Seng, and it was that spread's normal. That was 5 when things were kicking off, and it kept widening. Then it got out to, well, I think it still is 12 or so. I'll just check what I'm seeing on IG. Hang Seng. So Hang Seng's open, and it's sitting in 12.5 points. Now that used to be 5. I was happy with 5 and getting a 10-point round trip, having to give up. Now I'm giving up 25 points from 10. You know, that means you either have to widen your stop again. So when you get tagged eventually, you're going to get tagged on a bigger stop out, and they're taking a bigger chunk. And if you make money, it's meaning you either go for a bigger target than normal, or you give up some. So I thought I'd just touch on that. And I know Saxo have been doing the same. They've been widening it. They could always argue, oh, there's more volatility, which is rubbish. I think they can do it. They're fine. You know, so anyway, that's my little rant on that. So just be careful if you're trading your CFDs, who you're trading with, and just check on the spreads. That's why, you know, I do like the Trade Direct and their philosophy. You know, the platform's stable, consistent, and the spreads are going to be the same. If there is any problems, they work it out pretty quickly. So yeah, they've done a good job, I think. It's a bit of a hats off thing. Anyway, let's just have a look at. This is the SPY 200. I haven't traded that. So if there's anything you want to look at, if you want to have, we'll go over the gold trade as well. Anything you want to question about that and what we're doing? I don't even know where gold is just at this stage. Just see the chart. I've got it's backed off about 10 or 15 bucks. So I hope everyone booked in a partial at 1580. Yeah, it's just touched back down to 1570. It's on the rise a bit. We might get a bit of heat come out of this market because it has had a big run up. Basically, it run up from 1495 to 1580, nearly $100. You know, $90 rally. Now that's pretty hefty. That's pretty good. Yeah, is there any charts you want to have a look at? Any shares you're thinking about just to see? We'll go over that. I'll have a look at the ASX. We'll just go over just what I was mentioning before about when we're going to be looking to get ready. I'll just have a look at a few things, see if anything's happening. Nothing's really changed. I think I posted something out the other day about it potentially finding a base. I think it went straight through it the following day, so I was a bit off the mark there. But you've got to allow for those spikes, and instead of looking at that saying it's broken level on the daily, on the weekly it's rejected it. So there are two things. You have to sort of start stepping back to the bigger picture to see what's happening, and then start. Once you start getting confirmation of the bigger picture, you can go down to the your daily time frame just to sort it out, to view it anyway. SPY, not doing anything there. Basically, was watching gold the whole time. I haven't traded anything intraday today. I was happy enough with that gold trade from last night. And the kids home, make it a bit tougher. We've got a few other things I've been doing. But anyway, the SPY has, as you can see, I've marked up this. I was marking up looking for something like that. I thought there could have been further weakness. You had this level here. Was it 46.80? I don't think anything's really changed overnight. US can't come to terms with, I think it's two houses, the Republicans and the Democrats can't come to some sort of agreement on a bigger plan. I think they're trying to push it through, but the typical politics over there. People are losing their jobs and they're worried about their stupid politics. So can't come to terms on some bailout package or the figure, or I don't know what it is, but that got knocked on the head a bit. I think they did pump out something last night, which the market originally bounced in the US and then turned around and head south after that. So they sort of discounted that. And again, that matches up well to what we were saying before about markets not worried about it. You can throw all the stimulus you want at this stage. But, if they're saying, okay, we've got people covered for unemployment for the next 3 months, people go, well, I don't worry about 3 months. I'm scared I'm going to be out for 6 months to a year. And if they say 6 months, people are still concerned about being out for a year. So all these sorts of things, until something happens with the virus, because the virus spreads what's killing them. If we're in quarantine, the longer we're in quarantine, the less likely they're going to be back anytime soon. And the more likely we're just going to keep seeing new lows. So I think that's my view on stimulus, and that's you can see the market discounted it again last night. So each time they've announced stimulus, and they did it at a prime time just before the open of the US, and the market sort of popped up in the open and then sold off after that. Not long after that, about an hour after that. So they pretty much discounted it within the start of the session. So yeah, don't know. I mean, I can't tell you why we're up here, to be honest. I thought, like I said, I thought the SPY was going to hold this zone through here. We popped up, started to get, push through the opening lows, and I thought we'd get a lower high. I might jump in for a short, but instead we lifted straight through it. So that was off the table pretty much the next few minutes. And then we've been consolidating through here and starting to lift again. So not looking too bad. I wouldn't go long up here, that's for sure. There's still a perfectly good reason why it could back off from 47.30, wash out these highs and come screaming down tonight. That action, if you can see that sort of grind back up again, is not a positive grind. And we haven't retested. We've done this little minor retest, but that's nothing. That's not a retest. You want to go up, take out a few lower highs, go back and retest it and fail, and then build a lower high, a higher low, sorry. So the action I'm talking about is if we've got if we've got a zone through here, for example, if we've come into that zone and we started to bounce, we've done a minor level of that, I want to see push back up, and I want to see a bounce then, and then start to find some support. So for me, this is where I'd be getting involved. I wouldn't get involved here. That's nothing. That's just potential bounce, and then it can slam straight back down and stop you out. This is where I'll be getting involved. A double bottom with a washout of that level. If we just move that down, that ideally would be a washout. I can draw it. Here we go. Here we go. No, you don't like that either, do you? Oh, come on. There we go. That's what I'd be looking for. If you get something like that, that's a bit different. Whereas we've just been grinding up off that level. So to me, that's looking like a potential find a bit of a resistance up here. Could come screaming down. Don't know just yet. But that's why I love seeing those double bottoms with the wash clean out of the previous low, and it turns around and everyone who went short there has just been caught out. It's a bit of a, what do you call it, bear trap. The bears are diving in, thinking more, taking out the low, and then it just turns around and retraces on them and squeezes them all back out of the action. And that's what I'm looking for. I'm looking for to take advantage of that squeeze once there's been some shorts built up, and then jump on the buy side. That could be a bigger trade, but that's not what played out today anyway. So yeah, that was it on the SPY. I haven't done anything there. Let's take a look at gold and just see where gold is at. I've got to find that chart. So I was talking about this morning. So I'm doing, if anyone that doesn't know, I'm doing those streams generally 15 or 20 minutes. I was trying to do it, 10 or 15 minutes, and everyone knows me knows I don't mind talking. So it went on. They generally go a bit longer, but I'm just talking about different random things, what could help you with the trading, and help us get our word out there as well, get our name out there. But we're talking about the gold trade this morning and the reasoning behind it. Now, to explain the reasoning behind it, most of it's marked up here, if anyone can see. So you can see coming into this zone originally, we were alerting to this way back up here, if anyone can see. Once it popped out through that, anyone who remembers that day, that was a Monday, I think a Monday morning, when all this bad news played out over the weekend, and markets gapped. So the indices gapped down. They were getting hammered. Crude, all these sorts of things were getting hammered. And gold, naturally, people were buying that on the open because, it's that fear. It's that the market's driving that fear. No pro's going to buy on the open like that. More than likely, they're going to sell into it because they know that everyone's going to be loaded and then it just stops. There's no one else to buy on the open. You get that sort of spike up or that gap up. They know that there's probably going to be some more opportunity on the downside if it doesn't continue. And that's pretty much what happened to gold. It gapped up. I think it was a Monday morning, 9 o'clock, 7th. Yep. So that was a Monday morning. It gapped up, and that was a key level. You can see that key level around 1685. Those highs took out the high. Everyone was excited, saw that, expecting the safe haven gold to perform and just rally to the moon. That's everyone's expectation all the time. And instead, it traded back below and consolidated below the zone, and that's not a good sign at all. And from there, we're just looking to anyone that was going to go long. I was just telling them not to. Basically, you can see that up through here. And as soon as it started consolidating there, I was pretty, not 100%, but I was really confident that wasn't going to go up anymore. That was going to start to squeeze out all these longs that built up. You know, they got trapped up here. A lot of longs being trapped through here. They got a better opportunity because they're potentially still up. So as soon as it starts breaking down and it's not going up, they could sell for a small profit. But anyone above that has been caught out. As soon as it starts to break down, you're above, say, 50 or 1660, you're trapped. You're trapped in a losing trade straight off the bat. And if you don't go out, sooner or later you're going to get squeezed out. And that's what happened. It was just a big long squeeze, a big double top with a big washout. So it's just what we were saying before. And then you can see once it got a move on, it was extending lower, expanding lower, I should say, expanding here, expanding here. So that, to me, and we've mentioned this quite a few times, that is just a lack of buying in front of the sellers. So no one's trying to stand in front of that, that moving train. I think I'm saying the right thing, but that steaming train, they're not going to stand in it and just sit on the bid. So buyers were going, oh, look, it's getting a bit of a run onto the downside. Why would you stand on? So there's going to be some buyers there for sure. There always is, but not many. So liquidity in the buyers has disappeared when you can see these expansion and sellers are wanting to get out. Okay, and that drove price right down to say 1450. Then what we saw was this quick bounce, and this was just a bull trap. You know, you got this sort of sharp bounce up here, and it didn't break any anchor. The anchor for me was, well, probably not even there. It was more likely up here at around 1572, because that, if I can draw that up, that 72 was that leg down. Can everyone see that? No, that one. So I'll just make that a bit thicker. So that was the leg down at that time. The market expanded. So this rally back up here, everyone's seen the high low. You're focusing in on the high low and going, okay, we've come off support. We're going back up to the moon. You know, we're back to 1680. And without a doubt, well, sure enough, it just stops dead. Big hard rally. I don't want to get involved unless I got in right down here and got lucky on a very small time frame. And I probably wouldn't have held it that long. But seeing that on the 30-minute at least, I don't want to get involved in that until we get a pullback and hold another high low. And then I got my entry set up, but we didn't. And that, to me, I was looking at it here and even put up a note on TradingView as a bull trap. You know, the bulls have jumped in. Obviously, you've got a lot of gold bulls out there that think it's always going up. It's just times the crisis, it goes up. It doesn't want to prove that in the GFC. It took a while to start getting going. Caught a lot of people buying straight away because you traditionally buy gold when the market heads south, so on. But instead, it was just heading south with the market, with the indices. So that's the reasoning. You know, this bull trap got squeezed out. But the difference for me came when we saw this move down. It was grinding. You can see that grinding into the support zone again. So that's a hell of a lot different than things expanding like we've marked up here. That's pure fear. You know, fear driven. Anyone that's bought it is trying to bail. This is not. This is more like the liquidity in buying is starting to increase. Even though we've got lower highs, that doesn't mean too much because, you know, you've got this little push lower. And if it can't expand lower like that through here, and you've got a couple of green candles thrown in, that's buyers starting to step up to the plate. Okay. So there's more buyers starting to step in that second push into that 1650. And pretty much, you know, from there, that's history. It started bounce back out. I think I alerted it here. I said, all right, if we can get out, I've got to show you. Where is it? Just this one. And the reasoning behind the trade, if we start to break out here, if this holds because of what we're seeing, that price action I was just discussing, that grind back into the level with a big washout and rejection of 1450, and it finished above 1464, everything's lining up for me. And this is what I want to see. I don't want to buy it as soon as it starts breaking up and buy it off that trend line. You know, once we break through the trend line, that means nothing. I've seen it time and time again when it breaks through that trend line and turns around and makes a low and low. Right, especially on the indices, you'll see it time you've drawn up your trend line. Now, if you don't buy it off a high low, you could be fodder for a bit of a move down. And I'll show you what I mean. If I can draw it up. I'll draw it up here. So what I meant by that, and that's why I'm a big fan of high lows, as you know. What I mean by that, if this is your, don't worry about support. This is our trend down. Whoops. I'll just draw what I'm saying. So yeah, we'll just draw that. That's our trend down, all right? And we've got our market, you know, we've drawn up this, you know, it's touched here. You've done your proper technical analysis. You've gone, okay, it hits the high. Market's doing that, making lower lows here. It's popped up. All right. And then at this stage, it's getting to about here and you're going, well, that's the trend down. And then I know a lot of people would, if it goes up here, they will buy. And then the stop's going to have to be way down below that low, or they're going to have a lot, which a lot of people do, will buy with an already pre-planned stop loss. Now, I don't think you can pre-plan it without a high low. A high low is where you're going to be proven wrong. If you just have a 10-point stop and it's well above the high low, you could be proven wrong 3 times before the market takes off, right? So that's why I'm always in for those higher lows. Now, if I was looking at this stage, I'm never going to buy. I know people would, and maybe put their stop anywhere, anywhere up and down here, just depending on their risk tolerance. And this market can turn around and start heading down again. And then all of a sudden, you've got to readjust your trend line. Does that make sense? And I was watching this happen. I was waiting for a buying opportunity on one of the indices. I think it was either the SPY or the Hang Seng. And it kept doing that. And then they make a new low, and then you see it pop up, go through. You go, this is the time I'm going to get my high low to work from. Then boom, straight down again. And I had to keep readjusting these lines, and it just wasn't. It just looked like it was just computer generated. It was traders knowing what your retail's looking at, triggering it, heading back south to clean them all back up again. So that's a hell of a lot different to seeing something break out and then going down like that. That's, for me, is ideal. You got that. That's showing me buying is one thing, and if we're starting to get this action and it's at a higher low, that's ideally. This is prime what I'd be looking for, but even it could just take off like that. Does that make sense? And I'm happy to get in there because I know this high low is just held, and I've got this action here. Just change color. So the key things for me is that action there, and I know I've got my high low in play. So that's what I'd be looking for. And if we go back to gold, that's what I was talking about when I was seeing this kind of setup. I want to see it break up through there, break up and out of this contraction lower. That means confirm that this low is going to hold, but it doesn't confirm the setup yet. It doesn't confirm that the market's not going down. All it does is confirm the buyers are buying it off that level, but it's not confirming that they're looking to support it off another high low and push it up. It could just go sideways and you get caught in this sideways chop. So yeah, that's what we got. We got this little pullback. As soon as we got this, I thought, okay, bang, entry, exit. If it breaks here without touching this level, we're in, because that's my high low starting to confirm. And I think it's going to go up to 15.55. I thought at that stage, it's still ticking off now. So yeah, that was a good little trade. It's still going. I think we've tightened up our risk, taken a partial exit. So really now it's just sitting back and watching to see how high it can go and see what we can drain out of it. Does that make sense there, guys? Is there anything else, any question you had there? Hopefully I explained it well, but there's so many setups that are playing out that you've got, ideally when I wasn't doing a lot of intraday trading on the SPY previously because it was mainly share based. When the market's going up, intraday moves are not that great. You're getting the share moves is what you want, your swing trades and stuff. There may have been 1 or 2 good trades on the SPY a day. If I miss the first one, I get all angry and sure enough, I'm more than likely going to take a stop out and get impatient and then miss the second good trade potentially, or that was the good trade that I missed and then I took a couple of bad ones. Now, with the volatility and the movement, you're getting a lot of good opportunities during the session. So if you miss one, you could be 90% confident that if you're just patient, another good trade setup will play out. Even if you're on the wrong side, I found the market could be going up. I'll be looking to sell off a particular setup. And even if I'm wrong and it turns around and goes back up, I can book 10, 15, 20 points easily. So that's the beauty of having the volatility in this market. Getting on the wrong side of the market with a high probability setup, thinking it's going to drop like a stone and it doesn't matter. You can still get it right. I mean, I was trading the Hang Seng yesterday. I don't remember where, if I could show you. Just got to remember where if I took the short. I have to go down a time frame. Oh, I took it in here. I say I got it wrong. I mean, it's not too wrong, but off this lower high, and there was a trade in here. So I was looking at this one. Let's just mark it. I was looking at that zone there for entry short. After this big spike up, looking for an entry short. No, that wasn't it. It was midnight, wasn't it? Oh, I haven't gone far enough back. Sorry. let's just forget about that. It was here. This is what I was looking at. That zone. I think I was looking at it up here and there wasn't much set up. But in here, I was looking for a short. And you can see, even though, no, I think it was there. Even though it retraced on me a bit, I didn't get stopped out. And then it started spiking lower. By then, I sort of thought, okay, I'm wrong, because you can see that by about here, I thought I'm wrong, but I've got enough up my sleeve to think, well, I actually did think it was going to bounce off those lows, but I knew that I had enough, there's enough fat in it when it's moving down and it stops wide enough, you've taken your risk on board, that I could easily make money on the way down, even if I'm wrong, if I'm against the trend. I hope that makes sense. But that was probably a prime one. That was overnight. But even in here, the market's powering down. You don't know, because the actual MAs are up. You go, oh look, it's fell over like a stone. There's a good chance that because this zone is getting supported, that we're going to bounce off here. But you think, oh, my setup's there on the short side. I've got a lower highs coming to play. A break of that low, I should be short. And sure enough, it pushed down, bounced back up, retested, and then failed. And then it's turned around and headed up since. You're still getting those opportunities, even if you're on the wrong side. But if you're on the right side, just trying to think, if you're on the right side of a short, then that's awesome. It makes things a lot easier because you get on the right side, you see it go. All right, any questions there? Anything you want to look at in the way of stocks? Put up a stock. Still got about 20 minutes we can kick on for. Otherwise, you can just hear me ranting about the same stuff I've been doing. Any questions? Anyone's still there? Market's up 120. Let's look at the ASX quickly while I'm waiting. Where am I? XJO. Oh God, isn't that a mess? Let's just clear that up. I think that's time I'll probably clear it up. All right, so to start off, we'll do this from top to bottom. This is the weekly chart. Obviously, that was GFC. Yep. And the market's been, pretty clear. It's been a long-term move up here. Whoop. And that's could be where we're at the moment, and that's why there's potential for this to hold up. Or if you're taking it from this low, that trend up there, which is definitely broken, we saw that. And this is where, at one stage, there was the potential for the market to start holding up in here. Now there's this zone through here, potentially, or, if you're looking down there, look, that means that trend from day dot is pretty much broken too. No reason why it can't spike down. That's why I'm liking it somewhere around here. I thought it might have been a bit higher, but you can see what we're trying to look at. Anything constructive, no worries, Pete. Neither can I, mate. So this is a weekly chart. So these are sort of the zones where you've got to mark up in advance. You mark this up, and there's a chance that it could spike. When we look at it here, say it was coming down that candle. All right, it hasn't finished. You can look at that zone and go, look, that's roughly where we could be looking at. It could break through there and bounce straight back, retest it, hold it, and then go. And that could be a low. Okay, the low starts to get put in place. It's going to take a while, but it didn't just pitch straight through. So by the time, pretty much in that same week, it pierced all the way down to 48.61. So you can give up on that idea. All right. So at that stage, even though it's come all the way back up again, it closed that week, 2 weeks ago, up near 55.21, up at that zone. I'm discounting this support through here. I'm discounting that because it shouldn't break it by that much and then, flush back up again. So now I'm looking to the longer term, and that's that longer term trend line up. And I'm looking to zones where we could find some buying. I mean, I don't mind if it blasts through, because this kind of scenario, when it's the support zone's a little bit lower, we could chop around here and we could chop around in these lows, around that low, no problem at all, and hold up above it or hold around it. So this is a weekly chart, don't forget. So we could be a bit of time before, we might be doing this. Change that. No longer like that color. All right. So we can do this. I don't mind, even flush down, but you can see the theme is that we're trying to hold it, and then it starts to lift. If that's the potential, and that could take weeks, all right, even a month or two. And don't be surprised if it does happen. I wouldn't expect a sharp rally. If we on the weekly chart we go down straight back up, I'll be looking for a 50% retracement of that potentially, and then a roll over again and testing it again, and just cleaning up anyone that bought it originally. All right, so this is a zone where I'm just got my eye on. I mean, it's going to take some time, but I've got my eye on for it to potentially hold. Now, even if we go back down to these lows, that's 4,400. It's a 300-point drop, all right, from where we are roughly now. That could be done in a day, really. We've had 400 points down the other day and finished up, I think it was yesterday, over 400 points down on the open, and finished up 270 down or something like that. So it was a 150-point rally off the lows yesterday. So, oh no, not an hourly, sorry. So you're just dropping it down time frames. There's nothing really showing me on these charts. So I'll just take out these. My approach now is to start, okay, we've marked up our weekly zone where we could find some buying. And what's going to be a good indicator that this trend down is coming to an end? It's breaking of the anchors and starting to show some sort of price action. So what should you do? Mark up potential anchors on the daily chart and see if that matches up to different levels. And for me, this process of doing, okay, that's the trend down. When does it break? I've just marked up that anchor, and you can see that down, up, down, up, down, up, lower high, lower low, lower high, lower low. And if we start breaking up through this lower high, to me, this trend is coming to an end. There's enough pressure from the buyers to start breaking apart that trend down. And if it's off this zone, all the merrier. All right, so that's what I'm looking for there. I've marked up my daily, and then it's really just a matter of going down to see if these lower time frames are starting to, match up. If we can shop around here and start to push up, if we push up to this zone at 49.87, great. We might chop around a bit. We might wash it out, come back down and test, but you know that there is potential for the trend down, whether it's coming to an end, it's going to trade sideways, or whether it's coming to an end and starting to rally to put the squeeze on the shorts. We don't know that until it happens. So we could, from here, so we go up, we break that, don't buy. I wouldn't be buying again. We might do this and come back down and retest, but we could pretty much range trade, if that makes sense, before we start to get high low come into play and the confidence from the traders, from buyers to start lifting price. So I wouldn't, like I said, it can pop up here. And to me, that signifies, we're either, very least, we're going to hold these lows. All right, we're going to start to hold the lows, but until we get to something like that, I'm not interested just yet. Ideally, I want to see expand out, pull back, and hold a higher level. Maybe if we can draw this up, maybe, a deeper pullback, a good sort of thrust higher, maybe even higher, if that makes sense. Good thrust higher, then a good pullback to that zone, hold a minor higher low, then go. That, to me, signifying a bit of confidence that we're going to lift. All right, and we're putting this low. I'm happy to start to look at some stocks, but looking at some stocks to see. But it's going to be very, what do you call it, on guard, if that makes sense. I don't think there's going to be that sort of thing where we could merrily trade our way back up to the highs. Not at all. I'll be more looking for signs when weakness starts to come into particular stocks if we're long, because you've got the backing of the overall market potentially starting to lift, and then getting some prime setups on the individual stocks that have been beaten around, all that sort of stuff. So yeah, that's the ASX. And we've got MQG. Let's have a look at that. It's hard to talk about because we don't have much in the way of shares to really have a look at. Now, that's pretty much the ASX to a T. It is, in that oversold territory, but you don't buy it because it's oversold. It was oversold last time, way up at $135. Now we're down at $73, $75, 78 actually. Oversold again. So look at that drop. And there is absolutely no reason why we can't pop up, go oversold. You're watching this go oversold back to 20%. We pop up to 85 and we end up down at 40. You don't know. Okay. So for me, that's pretty much like the ASX not showing me anything. The beauty is, if you didn't buy it here, you were trying to, like I said, catch a falling knife. You didn't do that here, here, or here. it's at a better position. If you're buying shares and it goes lower, you can put it aside. All right, you can forget about it. But again, I'm not a big believer in that. I'm a believer in trading it for particular reasons. Because if you can get in the momentum, or not the momentum, in the habit of doing that time and time again, it's all the more better for your trading down the track. All right. And even if it's in a bull market, what it does by trading it, not just buying it from fundamental news, okay, you get that to back your opinion, or you get it to back your entry. Good fundamentals behind it. But I'm always a believer in buying it when it's proven it, so you're not wasting your time in the stock that's gone against you, and the fundamentals are saying it's really good, but the market's not saying it just yet. All right, and then you're sort of, like I said, you're locking up that cash for nothing when it could be used somewhere else to make some gains. And even if you have to give up 5%, like you say 3% to buy it at a higher level, but using that cash to make another 10%, the mathematics just adds up to me if you're trading, as opposed to just trying to buy off a low. So saying all that, um, like I said, if you can get into a good habit of actually trading off your key levels, key setups, and things like that, I think it's going to benefit you down the track to be more consistent, taking your stops, taking your hit, because if you don't trade off a technical view, there's no reason why you should have sold it up here, because fundamentals all looking great. So if you don't do that and you're still holding, it's just tearful. Anyway, let's look at. So I start to get a bit not emotional, but a bit passionate about trading as opposed to just investing. I've seen it too many times in the past. When I was a broker, seeing people having a go at us for not jumping back into the market when we thought it was weak, and then when we had that, I don't know if anyone remembers, there was that sell-off because of Asia. I think something happened in Asia. Can't remember what now. It was years and years ago. Market pulled back. We jumped out of a portfolio, well, an MDA, which is managed accounts. Didn't get back in because thought it was weak. And it did go higher, and people said, no, not doing any more because you're not in, should be in the market. And we know those people that were still in during the GFC. Yeah, we had to bite the bullet a bit and watch it go up without us, but in the medium to longer term, we're much better off, absolutely much better off being in cash when the GFC hit. Whereas I know a lot of people, because they're not trading it, they're just watching it, and it's that fear of missing out that drives them to stay in. It's the fear of missing out to try to buy a bargain, and that neither of those are conducive to trading the market, to properly trade in the market. So, good question. A lot of people would know that, apart from me. Potentially, I'm more inclined to believe, I don't think it's anything to do with dividends. It's just that mentality. Have we sold down enough on the banks? Let's check out the ETF, not the ETF, banking sector. See what the sector's showing us. Where are we? Financials. Yeah, smacked. I mean, absolutely beaten, isn't it? I think that's everything, isn't it? That's all. So yeah, the banks are copping it really. I think they'd be fine. I think it's just your natural overreaction. Anyone who traded through the GFC, remember the day we were looking at it, and I think it was just in 2009 we got lucky probably to get around the bottom. But I remember looking at this ETF. It was based in the US, so we started trading that, and it was a top 20 financials. And there could be don't there could be, and I was thinking about this the other day. I don't know much about my ETFs. I don't know what the codes are, but I'm sure there's got to be a financial ETF. Like there's the STW. STW is basically the 200 top stocks, the ASX 200, which you can trade as an ETF. Now there's going to be one on the financials. Just don't know what a code it is. It might be the top 20 financial stocks. If you're concerned about the financials, but you don't want to miss out on a bit of a bounce potentially, buy the ETF. Because our rationale when we're buying it is when fear was sort of peaking and everyone's talking what's going to be the next, you don't want to get in the market because the next bank to collapse, Lehman's had already collapsed, and all these sorts of things. You go, well, I don't care because the ETFs are not going to collapse. If that one collapses, it gets replaced in the ETF. So I know that ETF won't collapse now. And people obviously will say, oh, the ETF can go to zero, da da da. So yeah, well, Yeah, it can, but that's not going to be my concern. If the ETF on the top 20 stocks, financial stocks in the US is at zero, forget about it. There's anarchy in the street. You don't have a house, you don't have food, you don't have anything. There's no law and order because that's a financial system breaking down in the US. Right? And that was our rationale to start buying it. We happened to get it. It was around March, April 2019, and that was, we didn't know it at the time, but that was the low. It was already put in place, and it was rallied for 15, 10 years after that. Okay, so that could be a way to attack the banking sector because it is beaten down here. Look for an ETF. If anyone knows a code, I don't know. I used to know them pretty well, and I don't know them now. I know STW is the only one I remember. But a quick Google search would find you a financial ETF, maybe the top 20 stocks, financial stocks like your banks, top four banks, and others. There might be one of the top 10. I'm not sure what it is, but it's worth looking into and trading that for a buy because that's something you can actually do. And I think it takes away the individual risk on each stock. And you could look at this saying this is basically the ETF. It will be roughly look like this chart. That's your monthly. You can see that monthly has been poleaxed from 6 down to nearly 4,000. It's over 30%. Is it over 30%? Yep. 30% drop on that. And that's going to be matching up to the index. Now, if the index, I think, is going to potentially find a base, there's no reason why this won't find a base. And if you happen to pick the wrong financial stock and it still goes down, you haven't got that risk. Say just for example, you buy CBA and CBA hasn't finished falling and it wants to get down to $30. If you bought that to have exposure because you think the index is bouncing, it may not work. It may or may not work. But if you buy the ETF, you know it's going to match it and you know it's going to bounce. Okay, if the index bounces, so that could be a way to attack it. It's worth thinking about and it's worth having a look into. So I know I will if I remember. But yeah, with regards to that, like I said, I don't think dividends are going to prevent anything. Why didn't, there's some really good dividend stocks that were yielding quite well when the market was up at 6,000. I don't think that's not a way to trade because it's a good yield. It gets better. They can get better. There's no reason why the yield can't get better on these stocks if they pay the same dividends. So yeah, that's my view. I've never been big into dividends anyway. I'm happy if it's a good yielding stock and it looks like it's a buy. If this is a really cracking dividend yielding stock, what are we are on the STW, and I'm looking at this kind of price action, even up here, I'm going, oh, that's fine with me because it looks to me like it's going up. Even if I cut a bit of a whack because of the dividend, I'm on the right side of the market because it's going up and I get the dividend plus some growth on the underlying stock. But I think too many people look at purely the dividend gives me a 6% yield. That's great. But if you were doing that when the market was up above 6,000 to 7,000, it's pointless at the moment. So I think, yeah, don't know what the dividends are, don't know what they're going to do with them, don't know if they're cutting them, increasing them, or whatever they're doing with the banks. If they haven't moved them, it's just a better yield. That probably would, considering where the index is, that might be one of the reasons why it's bringing buyers in. It could bring buyers into the market, but I'm a big believer. I'm looking at the index and I think it's going to fall over. Wouldn't even consider worrying about dividend stocks. But if the index to me looks like it's at a zone where it could find support, I might want to start lobbing into some dividend stocks because I know if the index is going up, if I pick the right ones, yeah. Look, it could be if you're happy enough to buy that for the next year, I'm pretty sure we'd be a lot higher than where we are. But that's no guarantee. I could have said that, oh, we're all fine. 6 months ago, we're going to be higher than this in 6 months' time, but we've already halved in price again, if that makes sense. So it's a tough call. I'd be, like I said before, I'd much rather be wrong and missing out on that start of the rally and not having the opportunity for my ego to say I picked the bottom. I don't care about that. I'd much rather have peace of mind that no, I can go to sleep knowing I haven't bought in a falling market. I bought in a rising market. Every day of the week I'll be doing that. And at this stage, it's not rising. It's still trying to find a base. So there'll come a time when CBA is going to look like a cracker. But at the moment, it's not. It's looking like disaster. And like I said, that could be over. You could be looking at any indicator you want. It's probably going to show oversold. I'm pretty sure it's been oversold for a while. If you look at the daily chart, look, oversold when we're trading up here, $85. Now we're down at 55, nearly halved. Well, it's about a 30% drop too, isn't it? 30, 40% drop. So if you're looking at that being oversold, go, okay, at that stage, dividends might be 5-6%. That's a bargain. And all of a sudden you're kicking yourself because it is probably a bargain. So it's a tough one, isn't it? A real tough one to sit there. I just think when the market's going to melt down, if you haven't lived one or traded through one before, forget about it being rational because we've had a rational market. It can be tradable. When the market goes irrational and fear grips, do not care about a dividend, do not care about support, do not care about your next door neighbor. The market doesn't care about anything. It wants to go down, and people are scared of losing everything. And of course, you sell at the bottom. Um, so yeah, that's my theory on everything. Anyway, we'll have to call it a day there. I think my mouth's getting a bit dry. Too much yabbering on. I hope that was helpful. And yeah, keep an eye out for the talks I do in the morning. They're only going to be short and sweet. They're on different topics. Might be helpful. And if you're into improving your trading base, they're probably more helpful. Again, I think there's a mentality in shares that if you hold it long enough, it'll come back. Everything comes back. You just got to hold it. I think that's just silly. Yeah, and that's why you probably can't get returns every year averaging 10%, more than the index, 8%. It's not even that now. It's probably been crucified. On the back of that, and if you want 20, 30% returns on average a year, you have to start trading it. You can't just, have that mentality, your traditional ASX trader mentality. I think you've just got to trade it properly and get your skills up on trading. You know, identify weakness, identify strength. What am I going to do? Am I going to get out? Am I going to tighten my stop? I don't want to take a hit. All that sort of thing. And that all comes with, I guess, refining your craft, your trading craft. So yeah, I hope that helped, guys. Any questions? Like I said, I'm always available, especially now with there's not intraday trading today. So yeah, send us through an email to support@tradesetup.com.au, and I'll be happy to help. Happy to get back to you. If you do know my number, and you want to have a chat over the phone, give me a call. Probably won't pick it up. I might abuse you thinking I'm getting the it's an energy company ringing, but if I recognise it, I'll call you back. No problem. All right, guys. Enjoy the rest of your day. We're back in next Monday. Normal stream. Couldn't do it yesterday. Just unavailable in the afternoon, so put it to today. So next week it'll be the same time, 12:30 on a Monday. Yeah, so we'll call it a day. See how you go. We'll see. We'll keep in touch to see if something serious happens. I'll be doing the streams in the morning, so just keep an eye out for that. I'll try and put it up as an alert. But if not, join in the TradingView channel. You'll be able to find us on the trade_setup, I think it is. Search us and you'll find it there if you haven't already. If you don't know, you can just go back to the last alert I think I sent out this morning about a stream. You can just find us there and subscribe, and then you'll see it pop up anytime we go live. Anyway, have a great day. Keep safe, and yeah, think about what I've been talking about. Like I said, if anything doesn't make sense, you want to disagree, give me a call. We'll have an argument over the phone. All right, guys, enjoy your day. We'll speak to you soon. Bye.